All right, good afternoon, everyone. Happy New Year, and we're reuniting here again for the Audit Committee meeting for January 25th. And we're going to start off with our agenda items of approval of the minutes of their last meeting, October 26, 2023.
Move we adopt.
Lucy, do the roll call first. Committee member Edwin Belen.
Here, present.
Ed Kashadurian.
Here.
Jack Mavian is absent. Tom O'Shaughnessy.
Present.
And Chair Alex Parajon.
Present. Sorry, that was roll call.
And then maybe we could just allow her to read each item into the record.
Okay, perfect.
Item number 2, business agenda. Part A, report of recording secretary regarding posting of agenda. The agenda for the January 25th, 2024 Audit Committee meeting was posted on January 22nd, 2024 on the bulletin board outside City Hall. Item number 3, oral communications. Discussion is limited to items not a part of this agenda. Each speaker is allowed 3 minutes. The committee may question or respond to the speaker, but there will be no debate or decision. The Audit Committee Chair may refer the matter to staff for investigation and report.
I do not see any cards, and I don't have any phone calls waiting.
Great, thank you. Let's move on to the next item.
Item number 4, approval of minutes. Part A, minutes of the Audit Committee meeting held on October 26, 2023.
Move adoption.
I'll second that.
Roll call, please.
Committee member Edwin Belen.
Aye.
Ed Kashadurian.
Yes.
Jack Mavian is absent. Tom O'Shaughnessy.
Aye.
And Chair Alex Parajon.
Approve. Aye.
Item number 5, action items. Item number 6, reports and information. Part A, annual comprehensive financial report and report to the Audit Committee from Clifton Larson Allen LLP, Alwin De Leon, Finance Accounting Manager.
Welcome, Mr. De Leon.
Welcome. Good afternoon, Audit Chair and fellow Audit Committee members. My name is Alvin De Leon. I'm one of the accounting managers in Finance Department, and Happy New Year.
Thank you.
Happy New Year.
I'll start about the fiscal year-end audit results, and I will present the information about the annual comprehensive financial report for fiscal year 22-23, and then I will introduce the external auditor to present the auditor's required communication to the Audit Committee. The fiscal year audit, June 30, 2023 audit results. The city received an unmodified opinion for the fiscal year end 22-23, and which means that the city's financial statements are presented fairly in all material respects in accordance with the generally accepted accounting principles. In other words, the auditor provided a reasonable assurance that the city's financial results or financial statements present a true and fair reflection of the city's financial results for the fiscal year ending June 30, 2023. There is no material weakness noted in internal control, and the auditors has no disagreements with management during their fieldwork. The annual comprehensive financial report, best known for its acronym AFR, is a set of audited government financial statements. It is prepared following the accounting requirements set by the Government Accounting Standards Board, or GASB, Generally Accepted Accounting Principles, or GAAP, or other applicable legal requirements. It is prepared by finance staff, which is then audited by the Independent Certified Public Accountant, Clifton Larson Allen. The auditor's fieldwork started during June of 2023 and concluded on November of 2023 with the issuance of the independent auditor's report on November 20th of 2023. The fiscal year 22-23 AFR was presented to the City Council on December 19, 2023, and was approved for motion to accept. The AFR is also used by other government agencies, bond rating agencies, and other financial institutions for various reporting disclosure requirements. And lastly, the AFR is submitted to the Government Finance Officers Association, or GFOA, for an annual National Achievement Award. And to qualify for this award, the city has to publish an easily readable and organized reports following the GFOA reporting standards. And the city has been receiving this award for 28 consecutive years now. And the staff believes that the fiscal year 22-23 AFR will continue to receive this award. Good afternoon.
Let the record show that Mr. Mabian is now present.
Okay. The next slide is the government-wide statement. Statement of activities is the government's version of the income statement. It is one of the main audited government financial statements. It reports the changes in the city's consolidated financial picture. All changes during the fiscal year are reported as soon as the underlying event giving rise to the change occurs, regardless of the timing of the related cash flows, also known as the accrual basis of accounting. The statement of activities is divided into government activities and business activities. Government activities is mainly supported by taxes and grants, which are accounted for under governmental funds such as general fund, special revenue funds, debt service fund, and capital projects fund. The government activities recorded revenues of $498 million and expenses of $416 million, which resulted to an increase in net position of $82 million, and that puts the total net position of government activities as of June 30, 2023 to $1.1 billion. The increase in net position of $82 million is mainly attributable to higher tax receipt collections, such as property tax, sales tax, or utility users tax. The business activities is mainly supported by user fees or charges with the purpose of recovering cost of service. And these are accounted for under proprietary funds such as electric fund, water fund, sewer fund, refuse fund, and internal service funds. Business activities recorded $379 million of revenues and $401 million of expenses, which resulted to a decrease in net position of $22 million, and that reduced the total net position of business activities as of June 30, 2023 to $692 million. And the decrease in net position is mainly attributable to higher power purchase costs and a spike in natural gas prices last year. But overall, the city experienced an increase in net position of about $60 million, and that puts the total city's financial position as of June 30, 2023 to about $1.8 billion. This concludes my presentation, and I would like to introduce to you the city's external auditor, Ms. Daphne Munoz, the engagement partner of Clifton Larson Allen, LLP, to present the auditor's required communication to the Audit Committee. Thank you, and thank you, Chair and committee members.
Oh, thank you.
Good afternoon, Mr. Chair and members of the committee. Again, my name is Daphne Munoz, and I am here this afternoon to present to you the results of our audit for the year ended June 30, 2023. My presentation will cover 4 areas. I will go over our scope of our services, our auditor's opinions, and our report on internal control over financial reporting, and lastly, the required communications with those charged with governance. So for our scope of services, we performed an audit of the financial statements for the year ended June 30, 2023, in accordance with generally accepted auditing standards as well as government auditing standards. And this financial statements also includes the electric utility and water utility financial statements. the city spent more than $750,000 in federal expenditures. Therefore, the city is required to have a single audit, which is a compliance audit in accordance with uniform guidance. And this is currently in process. It's due by the end of March, and we expect to issue it probably like mid-March. And lastly, we did perform and agreed upon procedures on the city's calculation of the appropriations limit. So, the very first page of this big document is our independent auditor's report. Our opinion is about 4 pages. The first paragraph talks about the period that is covered by our audit. For this year, it's from July 1st, 2022 to June 30, 2023. And also the first paragraph talks about our opinion. So as Alwyn mentioned, we issued an unmodified opinion, which means that the financial statements are presented fairly in accordance with U.S. GAAP. So in layman's terms, it is a clean opinion. It is the highest opinion that the city can get. The financial statements are the responsibility of the management, as well as adopting sound internal controls over financial reporting, as well as implementing those controls. Our responsibility, again, is to express opinion on those financial statements. Our audit was conducted in accordance with generally accepted auditing standards and government auditing standards issued by Comptroller General of the United States. And those standards require us to plan and perform our audit to obtain reasonable assurance that the financial statements are free of material misstatements. So reasonable assurance because we perform our audit on a test basis. So we're not providing an absolute assurance because we're not testing 100% of the transactions that happen during the year. So in performing our audit, we obtained enough audit evidence to provide our unmodified opinion. So as part of our audit, we considered the city's internal control over financial reporting to determine whether our audit procedures are appropriate for the purpose of expressing our opinion. However, our opinion on the financial statements. However, we do not issue an opinion on the internal controls. However, if during that review we noted any issues that we think merits the attentions of those charged in governance, we will be issuing, when we issue this report, it will be noted in that report. But as Mr. De Leon mentioned, we did not have any material weaknesses or significant deficiencies or compliance issues noted in the report. Our professional standards requires us to communicate certain information related to our audit. First is that the planned scope and timing of our audit was communicated during our planning meeting with management and certain members of the council. Management is responsible for the selection and use of accounting policies, and those policies are included in Note 1 to the financial statements. This year, there is an emphasis of a matter that is included in our opinion, and this is just to emphasize to the readers of the financial statements that the city implemented two new statements, which is GAS B94. It changes the policy regarding the public partnerships that the city may have. And then the second one is GAS B96, and it's a change in accounting policies relating to the reporting of subscription-based information technology arrangements. And this is commonly in the GASB world, it's referred to as CIBITA. So it changed the way these two arrangements are reported in the financial statements. Basically, there are receivables and subscription assets that are now reported in the financial statements with a corresponding liability and as well as a corresponding deferred inflow. The financial statements include significant estimates for which those estimates could vary with the actual results. And some of the significant estimates included in the financial statements are the annual required contributions, the net pension liability, and related deferred inflow and outflow with regards to the city's pension liability that is with CalPERS, and that estimate is based on actuarial valuation provided by CalPERS actuaries. The other post-employment benefit, OPEB expense, deferred inflows and outflows, are based on actual valuation provided by an actuary that was hired by the city. The sick leave conversion related expense and liability related to the city's retiree health savings plan is based on an actuarial valuation, again, that is provided by a third-party actuary hired by the city. Same thing with the claims liability for workers' compensation and general liability. Those methods are prepared, the assumptions and methods are prepared by an outside consultant. Lastly, the liability for landfill post-closure is based on estimates provided by the LA County Sanitation District. So we did not have any difficulties during our performance of our audit. Our professional standards require us to accumulate misstatements identified during audit and that are clearly trivial, meaning they're not material to the financial statement. So included in the exit letter are just some misstatement or some adjustments that we passed because we think they are not material. The management and us determined that they are not material to the financial statements. And also we proposed certain adjustments that the management have corrected during our audit. We did not have any disagreement during our audit. The city has provided us representation letter dated November 20th, 2023, and basically in this letter, the city have represented to us that they provided us everything that is pertinent to our audit. And lastly, to our knowledge, the city did not consult with other accountants, which is commonly referred to as opinion shopping. This is when we have any disagreements with accounting transactions, which we did not have any with the city. And that concludes my presentation. I'll be happy to answer any questions.
Thank you, Ms. Munoz, actually. By the way, lovely report. Hopefully you guys do earn another award for this beauty here. It's a lot of good reading materials. So the question I have is, in regard to the prior year of 2022 compared to this year ending of June 30th, 2023, how long was your audit timing-wise compared to what was done the prior year? Because I think, wasn't the prior year the first year you worked with the city of Glendale?
No, this is our
third year.
fourth.
Oh,
year.
man, time flies.
Yes.
Oh, my goodness. All right, so it's your fourth year now. So compared to the prior year, what's the additional time that you spent compared to the prior year, or?
So this year, the additional time spent was really on the CBITA, the implementation of GASB 96. 87 took a lot of time last year, but CBITA actually took a lot longer because the city actually, the population of the arrangements that, as you can just imagine, with how much everybody rely on technology now, and this is what the CBITA is really related to, software and licenses, any subscription base. The city has identified, at least initially in their population, about over 200 of agreements that the city management was the one that actually did the review of all of those. But for us, since the population is pretty big, we actually did have to test the ones that they have identified that is required, that is subject to 96, and the ones that they identified not subject to 96, we also have to test that. So that's where a lot of our time was spent this year, and also the 94. But everything else is pretty, since this second year is the second year of GASB 87, we didn't have to spend much time on the leases this year.
Okay, and with the GASB 96 that you came up with, which is obviously every year, there's always 2 or 3 that come out. It's that one's all about subscription-based technology arrangements, right? So what challenges did you encounter trying to get to the compliance of that GASB 96?
I think the difficulty with the 96 is unlike 87, almost all lease agreements are kind of consistent as far as like what's included. But with 96, each arrangements are just different. Same thing with the payments also are a little different payment schemes. Some of them are in advance, some of them are. So we have to determine really what is the liability, what is prepaid.
Okay. Okay, great. Any of my colleagues here have questions?
Yeah, so I was interested in that 96 took longer than 87, because normally it's flip-flop, right? Generally, because you have a lot more leases.
Yeah, we were surprised too.
So, but you explained it's just the differences in agreement versus leases were pretty standard.
Yeah, the thing with 87 against 87, the leases were pretty straightforward. Especially also in auditing, you kind of have we know where to look as far as like we look at all rental income, rental expenses. With the CBITA, there's also some certain contracts that actually have different components. It has a technology arrangement component to it and has a hardware component to it, and there's a software component to it that could be perpetual, which is not subject to 96. So there were just a lot more components with regards to this arrangement compared to 87.
Thank you.
Mr. Chair, I have a quick question. So, thank you so much, first of all, for the report. It looks that everything as if it's like straightforward. So again, thank you to the finance department and thank you for the great work that you have done. I don't have any particular questions related to this statement, but given the fact that you're doing this type of work for a lot of other cities and municipalities, have you come across to any emerging trends that may pose like red flags or risks facing cities? We are living through a phase of like high interest rates, and a lot of I keep hearing a lot of jitters about like what is going to happen if this high interest rates continues for several years. Are there any types of risks that may not necessarily be material to this report right now, but could be something that the city can learn from what your experience is telling you?
So whenever I review a financial statement, the first thing that I actually really look at is their unrestricted net position, because really the unrestricted portion of whether it's the fund balance or the net position, that is what the city could spend. That's basic. You could have 100 million net position, but if everything is invested in net assets, if 150 million of that is invested in that. So now you have 150 million of net investment in net position invested in capital assets, then you really have a 50 million deficit net position. So usually that's what we look at. And this has also, a lot of cities, when, I can't believe, GASB 68, which is the net pension liability, is almost 10 years old. That is actually when a lot of cities were their total net position actually flipped to a negative, not just the unrestricted, actually their total net position. So as an auditor, I always look at the net position, and also we also look at I don't want to share most of my tricks, but transfers in and out. Really, because that's actually if transfers in and out is one thing that, especially for us, the fact that it is budgeted does not necessarily mean you have to transfer it. There has to be actual.
I see.
Like, if they budgeted 400,000 of transfers for capital outlay from the general fund to a special revenue fund or a special revenue fund, vice versa, if that $400,000 did not happen, the actual amount, the actual expenses, transfer should not happen between funds.
I see, thank you. And sort of a follow-up on that, and I'm not exactly sure this is a question that you can answer. I asked the question simply because I was looking at the forecast for the general funds, and I noticed, going from 2023-24 to 27-28, our reserves are going to drop from 36.4% down to 13.9%, primarily because when you, like in this fiscal year, 24-25, it looks like our resources, I'm assuming that's the name for revenues, is going to drop significantly. And I was wondering if this is sort of an anomaly or it's something that you see across the board. And maybe the city officials can tell us a little bit about.
Good afternoon, Mr. Chair and committee members. My name is Shujing Lee, and I'm the Assistant Director of Finance Department. So I know we been presenting the general fund 5-year forecast to council on a pre-audit basis, especially during the budget study section. Yes, I think in the next 5 years, it is I should say like the overall increase in the revenue, the percentage-wise, it is less than the increase in the expenses. So that's why you can see we'll be drawing down from our reserve to cover the higher expenses.
Okay, and then, well, I mean, I am not a professional in this field, but like I'm looking at a 13.9% reserve ratio. Don't you think that that's, well, it's not, I don't want to use the term alarming, but don't you think that it's kind of showing that we are moving into that direction? And like, is there anything that we can do about it? Sort of related to that, I had another question about what is our current bond rating for the city of Glendale, if you have that information?
So the bond rating actually is on page 18 of the report.
Oh.
So overall, our bond ratings are all like investment and above grades. So for that's one thing shows that actually the city it is in a very good financial shape, because besides we get the best opinion from the auditor. I mean, the bond rating agency rating just like a third party checking, right? Because they are very objective, checking all financials and all those things. But so far our ratings are very good.
Okay.
Yeah. So sorry. Please go ahead.
No, go ahead if you had.
I just try to answer your reserve question. Like you said, the 13% reserve. Yes, our current reserve policy is 25% is our floor, 35% is our target. I think that's why our finance team, our director, has been showing the council periodically for the general fund forecast, like, okay, if this trend going to continue, yes, we will have a problem. But that's why I think we've been presenting to council about like a new revenue strategies. I think on the same night when we presented our AFA, that's the same night also we like kind of proposed like 10 potential new revenue strategies, how to like increase the city's revenue to address the long term like the reserve problem. So I think I should say that the whole city we've been like know what our potential problem I should say will be, and we are trying to address to it.
So would you say, and this would be my last question, would you say the decrease in the percentage of growth of revenues is the main driver of this drop in the reserves, or is just the fact that our expenses are also going up?
I would think it's a combination, because from the expense side, especially our PERS, which is like a big elephant in the room. So I think based on the projection, our PERS pension expense going to peak probably around like 20, I would say 32, 33, and then we probably go down, because as we did the pension reform, the state did the pension reform about, I would say like 10 years ago. So we changed the formula. All the new employees are like PEPRA employees. So as more classic employees retire, more PEPRA employees key in, then the pension is going to be like this curve.
Like in about 8 years or so, right?
Yeah, we reduce. So that's why I said I don't think it's not only the revenue problem. Maybe we do have some expense. I think it's a combination of both revenue and expense that we need to address, because, of course, while we're trying to see what other new revenues the city can bring, but at the same time, I think we are all trying to control the expenses, right? To try to see how we can do things more effectively to reduce our expenses.
I see. Yeah, thank you so much. I mean, the only reason I asked was because as I remember, we have always maintained that 25% and above, and I just saw this number, and to me, it was a little bit alarming. That's why I asked the question, do you see this as a trend happening everywhere else? But our current reserve policy, I have to say, when we do comparison to other cities, we are still kind of on the high end, percentage-wise. Sounds good.
I wanted to ask a question similar, but in a different tone. So I saw it as more expenses, and then I read, and it was about pension. But pension is really driven generally by what's going on in the market and rates. So like we saw, for example, a big flip from 22 to 23, and then all of a sudden you were, and even before that, so you kind of see this big swing. So you might have a surplus you might not. So like when you forecasted out, what were you basing your forecast on?
We usually.
Was it the actuary, or was it you guys, your own internal guess of what the market's going to do?
No, we don't guess what the market to do. We are not expert on that. Yeah, you are definitely correct, because in the last 2 years,
Yeah.
1 year PERS got over 20% positive return, and they get the negative return. So PERS actually send the city every year annual actuarial report. They do forecast out for the future years what they think. But of course, knowing that the investment return itself can bring a big flag, we also hire a third party, another actuary company, to kind of look at PERS data to try to give us another third from another perspective what realistically our new trend going to be. So by basically combining PERS actuary report and also from the analysis from this third party actuary, then we kind of put in the budget projections.
So when you did that, did your sensitivity make the expenses go down or go up?
I think, because actually for general fund purposes, the total change in the net position is not what gets factored in the general fund. What reporting when they do their forecasting and for their budget is based on what you would call an actuarially determined contribution, and that is what's reported, and that's the cash contribution during the year, not the change in the net position, which is based on market conditions.
Mr. Chair, may I ask just one follow-up question to that? I think earlier you mentioned that you provided a report to the City Council regarding some of the ways to increase our revenues. Could you maybe give us one or two examples of what are the sources that you're looking at, if it's possible, to just give us a...
I think one of them is the business license tax, because I think Glendale is one of the few cities don't really have a business license tax. And then another one is, I think it's like the property transfer tax, like increase the percentage that when people buy and sell the house, increase that percentage. And then another one is maybe increased our TOT tax rate. And then maybe another one is the parking tax rate, because I think right now we don't have a parking tax. There's a few I can think of, and then also we talk about how we can also utilize maybe a city's parking lots, maybe do some leases, and then also some maybe billboards on the city roads and also the freeways.
I see.
Sorry, I cannot remember.
No, that's okay. That's okay. I mean, I was just curious. I was expecting the business license tax, but yeah, thank you for the confirmation. Thank you.
I have one question for Ms. Munoz. So in the communication with those charged with governance, I believe the journal entry that was recorded based on the audit was moving work in process or to capital. So I guess that's probably starting depreciation, for example, right, where it was not depreciated prior. But the entry in the end, I just don't understand it because I'm not very familiar with governmental. So it was a reduction of an asset, but an increase in the beginning net position. Is that because the net position has that?
No,
that
this is
asset?
actually more on the debit and credit position. So a positive is actually a debit to the net position, which is a reduction of net position.
Okay, thank you.
All of mine were asked and answered. Thank you.
Okay, you good? All right, well, thank you again for the informative info and responding to all the great questions our colleagues had. Appreciate it.
Thank you. Thank you.
Thank you. Next item on the agenda.
Item number 6B, Internal Audit Activity Report as of December 31st, 2023. Natalie Minami Valdivia, Principal Internal Auditor.
Good afternoon, Chair Patajon and fellow Audit Committee members. My name is Natalie Minami Valdivia, and I'm the Principal Internal Auditor within the Internal Audit Division. I'm here to share with you the Internal Audit Activity Report as of December 31st, 2023. So I will go ahead and walk you through the 7 sections of our Internal Audit Activity Report, beginning with Section 1, the projects completed. So during this past quarter, internal audit completed one project. The fuel purchase contract audit was completed by Senior Internal Auditor Ani Antonasian. Ani has prepared a PowerPoint presentation to walk you through this completed project.
Good afternoon, committee members and Chair Parahon. My name is Ani Antonesian, Senior Internal Auditor in Management Services. Today, I'll be reviewing with you a recent audit we did on one of the city's fuel purchase contracts. So the city has a piggyback type of cooperative agreement with the city of Huntington Beach for fuel purchase. The vendor provides us with unleaded and diesel fuels for our fleet. The vendor delivers gasoline and diesel to 20 different sites across the city. The agreement is with Merrimack Petroleum Inc. and is administered by the Public Works Department. And the contract expires in 2025, and it is up for $5 million. I'd like to walk you through the contract terms, some of the key aspects. So for ordering, all fuel orders must be authorized in writing by city staff and emailed to the vendor. The physical inventory of the fuel is monitored by the main system. It's called the Veeder-Root system. The delivery of the fuel. During delivery, the system is used to obtain pre and post levels of fuel so that city staff can check that the actual gallons that are invoiced are delivered. And apart from having to rely on printouts that the vendor has to do through the system, city staff can also query the system for reports. There are some oil spill procedures. The vendor is responsible for oil spill containment that may occur during transit loading and unloading operations. The vendor is to be held financially and legally liable for the complete containment, remediation, and disposal of all hazmat. For fuel quality and testing, the fuel supplied by the vendor should be free from contamination according to the contract. The city reserves their right to conduct spot checking through independent laboratory. Fuel type, the prices of all fuels are to be, so for fuel pricing, they use what's called for short OPIS, that's Oil Price Information Service. They provide independent fuel pricing, and they are supposed to give us the unbranded low daily rack price. They invoice us for what they deliver, and the city is exempt specifically from the federal fuel excise taxes that's in the contract. And this is what this system that I was referring to, the Veeder-Root, they look kind of like this, not this exact model. Each fueling site is equipped with one of these panels, the monitoring panel. It is an automatic tank gauge that's programmed to monitor the use, compliance, and performance for both above ground and underground storage tanks, which we have both in the city. I'd also like to review the city's internal policy. So aside from the contract, we do have procedures. An important part of it is that I'd like to mention are how we monitor for any discrepancies that may come. So if, for instance, they deliver something but they invoice us more, and there's an allowable discrepancy per these policies of 1.5% if it reaches that level and it's more, and that's a threshold that's set to be acceptable to adjust for temperature expansion or contraction of the fuel. So anything greater, according to the policy, should be acknowledged by the vendor and city staff. The objective really of the audit was to determine that the billing is in compliance with the contract terms, including whether taxes are collected appropriately and whether the pricing terms are followed, and we covered fiscal year 2024. To perform the audit, we interviewed city staff that administered the contract, did a detailed review of the contract terms, any available internal policies. We performed a single site visit to a fuel delivery site. We also conducted a detailed sample invoice test work on all invoices from the vendor in September 2023, and we also reviewed delivery reports for 4 sites during August, September, and October 2023, so sampling basis. And we did heavy test work on taxes charged as well. There were many taxes that are charged in the invoice. In this audit, we've identified 7 improvement opportunities. I'll focus them in 4 areas: fuel delivery and invoicing, oil spills, insurance and vendor reports, and the price verification and fuel quality. So for the first one, the first observation is related to fuel delivery and invoicing. So as I said, we reviewed 14 invoices from August to October 2024 for four fueling sites and the corresponding Veeder-Root system reports and reconciled these to any available printouts that the vendor is supposed to be giving to us. And we noted that only 2 of the 14 invoices had these printouts available. According to staff, the printouts are not consistently produced by the vendor and are not always retained by staff because the system can be queried for the reports or any information after the fact. Also, 2 of the invoices we wanted to monitor to see about that 1.5% discrepancy, what the magnitude is really like for that. There were 2 instances out of the 14 that we noted, and it was a very insubstantial amount that we were shorted. So for instance, like, let's say it's 8,000 gallons that's delivered, it was like 100 gallons or so. And I have specific numbers if you'd like to see those. In light of these 2 findings, we recommend that either city staff follow the current procedure, and we're going to be retaining and keeping these printouts, or we take a more analytical approach after the fact and monitor the discrepancies, given that they are immaterial, but still we do spot checking. It was also noted that we don't always have staff present for the fuel delivery. We recommend that someone is present and signs the bill of lading, especially in case of oil spills and such. And the oil spills procedure is the next observation. So in conversation with staff, it was noted that for smaller spills, we do contain them. I think a number of about 5 gallons or less was mentioned. So we would like that to be documented in our policies, just to be consistent with what's in the contract, because the contract does refer, and this could be a potential big liability. So we want the responsibilities to be clarified and documented. And we also request that the vendor provide its oil spill procedures that is also in the contract. The next couple of findings are related to insurance. As you may know, all vendors at the city should have appropriate and current insurance documentation. This is just a simpler procedure, but when we started the audit, the city attorney's office staff said it was expired. So we've worked with them and everything is current, and we have we're going to be enforcing the policy moving forward, making sure we're looking at reports, and we have these current insurance docs in place. The agreement also states the vendor was to provide us some reporting on a monthly, quarterly, and annual basis that are related to quantities, locations, and types of fuel that are delivered, including pricing and total cost information. And we'd just like to see some sample reports to see their usefulness, just because it's in the contract. Next, price verification and fuel quality. Per the agreement, the vendor is to acquire an Opus subscription in the name of the City of Glendale for diesel and gasoline annually. So right now, when we get invoices, the last page is usually a PDF from Opus, and that's our kind of only verification method. But since this subscription should be available to us, we recommend that the vendor provide this to us so we can go to the source and verify the prices. Lastly, fuel quality is an important factor, obviously, in ensuring that our fleet are maintained effectively and efficiently. The latest fuel quality that we requested was performed in 2016. The results from that actual test had 2 recommendations that we would like city staff to follow up on. One is to perform the test more frequently. That quality report specifically said annually. And second, to perform quality testing on the fuel before it reaches our tanks, for obvious reasons, just so we can see the quality on their side before it settles. And that concludes my presentation. I would like to thank Public Works staff for their assistance during the project. Staff and I are available to answer any questions you may have. Thank you.
Thank you, Annie. Great report. And I have a question in regards to the cap that you guys have. We're almost a year now from the contract ending. What percentage are we at now?
Yeah, I think it was about $2 million left to spend on the contract out of the $5 million.
Okay. And is there a objective, a plan to revisit other vendors after 2025, or are we planning to still stick around with the same one?
I wouldn't know. Would you like to take that?
Good afternoon.
Good afternoon.
Sabata Hamber-Sumian, Fleet Superintendent. I'm not sure what purchasing's plan is moving forward after this one expires. They're going to bid it out, if they're going to piggyback off another city. I'm not exactly sure what they plan on doing with that.
Yeah, so it looks like you're just using Huntington Beach. So obviously we have partnerships with Pasadena and Burbank. Who knows what they're using? But figured, not sure how that purchasing works, but hopefully they do some sort of bidding out there for this as well.
I'm going to assume they piggyback off the best contract they were able to find. And
That's good. All right, anyone else?
I had a question for Audie. So, point number 2 around the signature on the bill of lading. So, I have an assumption that when an invoice gets sent in, that you need to make sure that the invoice is correct, that you receive the goods, right, before payment's made. But if they didn't sign the bill of lading, how do we know we got the right stuff
Right.
to pay for?
So I think the reason why that wasn't a priority 1 item, right, for instance, is because those the Vita route actually detects the oil level, so we know the fuel is delivered.
Yeah, so
And we want-
even without a signature, you could verify based on
Right.
the increase of that.
That's
of the
right. I mean,
fee
that's
rate.
a secondary control.
Good afternoon, gentlemen. I'm Mike Lunsford.
Oh, Mike.
To verify the fuel, the Vita route has a tank level gauge inside of it, and it's a float just like on your vehicle, and it tells you by the 1/4 inch or 1/8 inch what the level is, and it calculates how many gallons are received or what's in there real time, and I compare that to the bill of lading that I get. That comes from the rack where they load the truck up, and then they deliver the fuel into our tanks above ground or below ground.
Got it. Okay, thank you.
If I may ask an additional question. So I think one of the recommendations was the annual testing. So I'm assuming staff does the test for the quality of the fuel, right? And then, so how many sites are we talking about?
20 sites,
20
about
sites.
40 tanks.
Okay. It
Some
shouldn't be that
sites-
hard of a process, right? I'm guessing, just testing the quality.
Right, I do test the fuel inside the tank periodically, and I do have it polished. They call it polishing. They clean it, where they'll remove it from the tank, push it through a filter back into the
Oh, and
tank,
then- okay, I
keep
see.
recycling it. And I have a little device that I dip into the tank and put it in a clear jar and kind of look at it. I have sent it to laboratories in the past, to have it tested, and there's like 200 different tests they do on the fuel to see how it is.
Okay.
And then I do a before and a after to get a benchmark of where we are, and then I do visual. I take pictures and store all that in the computer.
Thank you. And another follow-up question for Ms. Antonessian. In the beginning of your presentation, you talked a little bit about analyzing taxes. Did you find anything of?
That was the main risk area that we were actually focused on, and we got reasonable assurance that
Okay.
everything was okay on that end. Yeah.
Okay, thank you.
Also, you mentioned or you show on there a 1.5% loss. Is that because of evaporation?
It wasn't lost, so that is a number that, and my, sure, if you'd like.
Wouldn't that be the standard deviation threshold?
Okay, so the fuel level that's read by the Vita route isn't always exact to what the delivery ticket says. So a gallon of fuel is a gallon at 60 degrees. So you take the summertime, they put it on a truck, it takes an hour to get here, it grows to, let's say, 90 degrees, it grows 1%. And the Vita route, again, it's not exact how many gallons you get or what's in there. So I figured if I'm about 1.5%, I figured that'd be within tolerance. Coming from a manufacturing background doing inventory, that was acceptable there, and I thought that was fair enough here, and it's been pretty close most of the time. Yeah, sometimes it's really close, yeah.
Thank you.
Anyone else?
I just want to say I appreciated you putting the details of the 1.5%, because when I read it, I'm like, how did they come up with 1.5%?
Right, yeah.
Sorry, one other thing. So obviously, you wrote the report, fuel purchase contract. So it's really just about the acquisition of the fuel, but you did nothing around testing, are the right people getting the fuel and access to fuel and things like that. That wasn't part of the audit.
Right. So actually, Mr. Kashajarian caught on the main point really was the taxes, that we didn't really find anything. So it was a billing focus for this audit, yeah.
Thank you.
Which, again, sorry to ask this follow-up question. Is there a way, I'm out of curiosity, to see if we can do an accounting of the miles driven by the vehicles and the gas consumption, just to see if there's some sort of a correspondence, like, what is our average mileage per gallon of gas that we purchase?
Right. Like if we're getting good fuel mileage, no, the objective.
Or I think going back to what the question that
It's a different way to say, like, did the right people get the fuel, right? Because like as an example, if 10 people got fuel but only 9 should have, and you do this kind of big picture analysis, all of a sudden your mile per gallon is 10 and it's normally like at 15. I think it's just a shortcut, right?
exactly.
Yeah.
Okay, so the fuel system that we're using now, the fuel management system, is the EJ Ward fuel management system, and it has dual authentication. So I have a tag on each vehicle, and I have a nozzle reader, so when the two see each other, it says, okay, that this vehicle is number 123, and it only takes unleaded, it can't take diesel. And when the employee goes to authorize the transaction, they have to go into a kiosk and put in their employee ID number.
I see.
And some of the vehicles, newer ones going forward, the mileage is already calculated because it grabs it off the onboard computer, or some of the older vehicles that don't have computers, or, it's all done manually. And if it's within 250 miles of what the last entry was, or what it should be, it's okay. But if it's greater than that, let's say they tried to fill up somebody else and it took too many gallons, it stops the transaction. So yeah, we have a pretty good security on the fuel delivery. And as far as receiving the fuel, I keep a spreadsheet. So every time I look at how much fuel is needed for a site, I highlight it on my spreadsheet. And then every day I check this. And after I get the fuel delivery, I see the volume go up, and I enter that onto my spreadsheet, and then I note that it was received. So that way I know the site do get the amount of fuel that I ordered, and they're going to the right site. They're not delivering it to the wrong site.
And just so example, obviously one fuel site is for the buses down by the train tracks.
And those guys take CNG.
Oh, okay.
And I don't manage that.
Thank you.
Thank you very much. Appreciate it.
That was good. You answered the question before I got it completely out.
All right, then I
Next
will
item.
continue on with the internal audit activity report. So section 2 is the projects in progress. And as of December 31st, 2023, we had one audit project in process. The Beeline Fixed Route Transit Agreement is nearing its completion, and we anticipate that it will be presented in the April 25th Audit Committee meeting. Moving on to section number 3, continuous audits. In this past quarter, internal audit completed 3 continuous audits. The first being the UAC APP InterGov continuous audit, and this test covered InterGov user access as of October 2nd, 2023. Its objective was to determine whether InterGov user access is limited to authorized users and whether the access is revoked timely when users are separated, or when access is no longer needed. The test results were shared with management, and all exceptions were corrected as of October 25th, 2023. The second continuous audit that was performed was duplicate payments, and this test covered vendor payments for the period of April to June 2023. And this period covered over 19,000 records totaling approximately $157 million, and the objective of this test was to determine if adequate controls have been established by management to prevent duplicate vendor payments. And based on the script that was run, it identified 389 outliers that required a manual review by the internal audit team. Based upon the internal audit's manual review of these 389 outliers, it was determined that there were no duplicates identified. So these test results were provided to management as of December 4th, 2023.
Can I ask a quick question on that?
Sure.
So I'm assuming, based on the script, 389 popped as potential duplicate payments. And then when you manually checked, you might have said, oh, this is the same amount, the same vendor, but it's like a different date? Or something like, what were you finding as the cause of these 389 items being pulled into the script?
So most of the time, unfortunately, the way our data comes out is there are different line items, like they may be to different projects that our script doesn't catch because of the way the data works. So we would just pass them because they're accounted for in different project numbers, for instance. So that counting string would be different.
So I'm just assuming that as you continue to do this audit style, you add that to the next script so that when you run it again, it doesn't pop?
I think it just makes, when we do this over time, we gain expertise and we don't spend as much time because we know it's not an outlier.
Okay.
But unfortunately, we can't not have those be outliers to begin with.
Yeah, so there's no updating of that script, I guess, is what you're saying. Okay.
No, the data has to be fixed, yeah.
Thank you.
Thank you, Ani. The third
Quick
and last
question, and I think I should have asked it sooner. On the Beeline fixed transit route PSA audit, are you dealing with just the basic line of the 11 goes here, 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 so many routes per shift? Or do you deal with also downtime, or if they're staying in a spot for a while? I just noticed that when I get on and off the Beeline, anyone in a wheelchair, they phone in to dispatch to let them know that they picked up or let go of a passenger. Is that to explain the additional time it takes? Because if two wheelchairs get on and off, or when they're all going to the Galleria on the 4 route, that would cause for a difference in time versus just running through the city and picking up 2 or 3 ambulatory passengers. Is it that detailed, or?
Actually, the objective of this audit was basically a contract compliance audit, so we didn't get into the operations of the Beeline, so we would not have taken a look at or known about the contracting.
Thank you.
You're welcome. Sorry. So the third and final continuous audit that we performed was the UAC ADEE continuous audit, and this test covered Active Directory user access as of December 1st, 2023. So it tests also to determine whether the employee Active Directory user access is limited to authorized employees and whether access is revoked timely when an employee separates. The test results were provided to IT on December 4th, 2023, and the exceptions that were identified were corrected as of December 13th, 2023. Moving on to Section 4, the outstanding audit items. As of September 30th, 2023, there were a total of 54 items outstanding, and then during this past audit, there were 7 items that were added this quarter from the fuel purchase contract audit, and there were 8 items that were implemented and closed. So as a result, as of December 31st, 2023, there were 53 items outstanding. Section 5 is the outstanding priority 1 audit items. For the quarter ended December 31st, 2023, there was 1 outstanding audit item with a priority 1 risk rating. And as you recall, a priority 1 risk rating is given to audit items representing critical control weaknesses that potentially expose the city to a higher degree of combined risks. This 1 outstanding item is a repeat item for the business registration certificate audit, and that was issued on September 28th, 2023. Based on our quarterly follow-up process, the Community Development Department has made progress on this item. They have actually updated their policies and procedures to make sure that the business registration certificates are not renewed past the expiration date, and they're currently working on updating the renewal reminders to include a note about the consequences of renewing not renewing timely, and they're also working with Information Technology Department on resolving the BRCs with the pending renewal statuses, and they're documenting the expired BRC monitoring and follow-up procedures. So the updated anticipated completion date for this item is now March 31st, 2024. Item number 6, or section 6, is the outstanding audit items meeting the audit committee discussion criteria. And as you know, based upon resolution number 2 passed by the audit committee, city department directors are requested to attend audit committee meetings to discuss audit items when the status of the item is changed to not implemented, or and when an item has not been implemented within 2 years of the report issuance, and also when an audit item has not been implemented within 3 years of the report issuance. For the quarter ending December 31st, 2023, we do not have any audit items that enter any of these 3 categories. Section 7 is advisory services, and internal audit participated on 3 teams or committees this past quarter, including the Investment Policy Advisory Committee, the PCI Compliance Team, and the Energy Risk Management Committee. I'd like to highlight internal audit's participation on the PCI compliance team for the last quarter. As you know, internal audit performed 3 quarterly PCI compliance audits with the objective of demonstrating ongoing compliance, timely identifying and correcting deficiencies, raising awareness, and preparing the city departments for the annual independent audit performed by the city's contracted quality security assessor. The independent review was performed by the QSA in November of last year, and internal audit participated by attending and shadowing the QSA during his site visits and his system reviews. I'm happy to share with you that the report on compliance that was issued by the independent QSA determined that the city was in compliance with the PCI DSS, or data security standard requirements. This concludes my report for this quarter. Thank you.
Thank you. Anyone has any questions? Well, good job. All right, let's proceed to the next item.
Item number 7, Audit Committee staff comments.
Anyone?
I'd like to make a comment. On behalf of the internal audit team, I'd like to take this time to publicly congratulate our former internal audit manager on her retirement. Jessie Zhang, our former internal auditor, Jessie Zhang, on her retirement. And we'd like to acknowledge and thank her for her 23 years of dedicated service and to the city and the city of Glendale and the audit committee. We wish her continued success in her future endeavors.
Thank you. Thank you for bringing that up. And also, we want to congratulate you for stepping up to the new role as principal internal auditor.
Thank you very much.
So they changed the title name, right?
It changed last October, but yes.
Okay.
Thank
Perfect.
you.
Well, congratulations, and we're looking forward to working with you throughout the years to come. Please don't
Thank you very
retire
much.
anytime soon. All right. Anyone else? Any comments?
When I spoke to her before she left, I said, so is there somewhere we can come and buy you a drink or come by and congratulate you? And she says, really, today is my last day and I'm gone.
Other words, no. No one else?
Yeah, that was my next question. I was going to say, why isn't she here so we could congratulate her or give her a plaque? But that answered it.
She's in Bahamas right now. All righty.
Just for my part, yeah. For my part, I just wanted to recognize her efforts. I think she was here since I joined. I remember 2015, right? And so she has been that one constant every time I've been to these meetings. So, and of course, I communicated with her after her departure, but I just wanted to also publicly recognize her contributions and wish her well. Thank you.
It's outstanding leadership in the internal audit, and it shows by the quality of work we're still getting, and continues to grow with the future leaders. So thank you, everyone, for your time and effort as well to putting these great presentations together for us. It makes it easy for us to actually understand what's going on. And I know that, I forgot what department it was many years ago when they first developed the design of the audit reporting with the scale system there. So I'm glad that was created too, because that made it a lot easier. So we've been doing this for a couple of years now. So, but yeah, we do appreciate her years of knowledge and experience, pretty much running the department, and we're looking forward to continue success and more awards, right? So thank you.
Thank you very much.
Next item.
Item number 8, new business.
Any new business? None. All right. Next item, please.
Item number 9, adjournment.
All right. Motion to adjourn.
Motion to adjourn.
Second.
All right. We're adjourned at